And as I understood the syndication model better and better, I realized, okay, it's really a partnership at its most fundamental level. And it's a very specialized kind of partnership where people have roles. Some people run the deal and do the work. Other people write the checks and collect payments, but are otherwise passive. That's phenomenal, right? Everybody gets to focus on what they like to do and where they can add value. And together you can take down much bigger deals and scale up way faster than you could on your own.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Joel Fine. I met Joel at actually, he was hosting an event. You'll hear me talk about it a little bit, a panel that I was on a few months back. And it was a pleasure to have him on the show. He has a just amazing path into this business. Now he's full-time real estate investor, syndicator, even developer. He's based out of Austin. He's general partner, I think, in 1,100 plus doors, key principal. He's a limited partner in like 7,000 plus doors across 7 or 8 states. And so he kind of hit this business head on and has grown very fast. And we talk about some of those starting points for him that are so common. I hear from people every week that talk about some of these same limiting beliefs as far as partnerships and finding partners and moving forward with partners. Should I not? Well, I'm having to give part of the deal away, right? And we go into a little bit about that, but how he's grown so fast, and it would not have happened if he was not willing to find those partners and go through that process of making that partnership happen, making it work. Now he's sponsored numerous projects in different capacities and is doing big stuff. But we talk about many parts of that process that I think is going to be very helpful for you today. Joel, welcome to the show. I was honored to be on a panel where you were hosting not too long ago at another conference, and it was a pleasure to see that you were part of our show as well. And with your background, I know you're going to be a great guest. And share with the listeners a little bit about your transition into real estate. Why real estate? When was that? And then, I know you're 1,000 plus doors as a general partner now. And so let's get into it.
Absolutely. Thank you so much for having me, Whitney. So yeah, my background, I actually was trained as an engineer in college and worked in high tech and IT for many years as an engineer, and then as a project manager and a program manager working closely with engineers. Sometime about 5 years ago, I started investing in real estate as a side gig. Bought a single family house, then a duplex, then a quad, then a few more duplexes, and started scaling up from there. Right about the same time I was beginning to invest, I also learned about the syndication model. That was brand new to me until relatively recently. When I learned about it, I was intrigued. I thought, this is something I want to learn about. Maybe I want to participate.
You didn't think it was a big hoax, like some people, like a lot of people.
I wasn't sure. It sounded too good to be true. So you're right.
Yeah.
I was skeptical and I wanted to do my due diligence. So at the time, since I was investing in investment real estate, it was just on my own with the little stuff. But I was also going to meetups, reading books, just trying to educate myself on the real estate industry and investing in real estate. And one of the meetups I was attending was run by a group of 4 investors who were doing their own syndications, buying apartment complexes in the Dallas-Fort Worth area, fixing them up and selling them. And they were doing pretty well with that. So I got to talking with them. Eventually, I invested in one of their deals as a passive investor, talked with them at length, and got them to let me dial into their property management calls every week. So once a week, I would just dial in and go on mute and listen as a way to inform myself, educate myself, not just about my investment, but also about syndications and how they work and how to manage an asset. And over time, I developed an understanding of sort of what goes on. I decided, hey, this isn't rocket science. I can figure this out. I would observe what are the problems they're having, how do they resolve them, which problems persisted from one week to the next. And one of the things I concluded was, hey, a lot of the skills that it takes to be an asset manager, they're actually pretty similar to the skills that I had developed in my career as a program manager. Figuring out deliverables, holding people accountable for what they say they're going to do, following up when things aren't done, all those things. It's block and tackle. It's not rocket science. And so thought, okay, maybe I can do this. Maybe, this looks interesting. It's promising. So I did a few more passive investments. And as I was doing those passive investments, it was sort of intentional to learn enough about the business that if I were to choose to do my own, sponsor my own deals, that I would be capable of doing that at some point. So I think I ended up doing about a dozen passive investments before I did my first sponsored deal. And in that sponsored deal, I partnered up with some folks who had done several deals of their own already. So, pairing up with people who know the business better than I do and have more experience and maybe can open more doors, that's been a key to my path forward. And so that's what I've done. Since then, I've syndicated, I think, 6 deals, total of 1,100 plus doors. And I've even syndicated now a ground up development deal where we've acquired some land just east of Austin, right by this big brand new Tesla factory where Tesla just moved their headquarters. So we own some land out there. We're going to build some apartment buildings. So I'm full force in real estate. About 2 years ago, I moved from California to Texas. And right in the middle of COVID, that was kind of an exciting time. At the same time, I left my W-2 job to focus full time on real estate. And I haven't looked back since.
That's awesome. You moved from California to Texas when seems like you weren't the only one at that time making that move, right?
Oh my God, there was a convoy of U-Hauls going the same direction.
No doubt about it. Well, it's interesting, your story, your background. I've heard of numerous people kind of make the similar path. However, many people still are hesitant to do this, do what you have done. But I think it's great that, you took action, you started investing in deals and learning from operators, right? But you reached out to, what I thought was great. Like you reached out to an operator and was able to start participating on those calls, right? Just to hear and learn. And that, I just think that was probably very valuable, right? And even help build your relationship with that operator until you invested 5 times, passively, in 5 deals until sponsoring your own project. Tell us a little bit about, being able to sponsor your own deal is no small feat, right? Especially the first one, right? It seems that's the hardest one to get done for everyone. And so give us some details on getting to that first project. Like what were a couple, was it being on those management calls and maybe building that relationship with that operator, or was it other operators, or what were a couple of the key things that you did that helped you to get to that first deal of your own?
So the first deal I did was, I was barely a sponsor on. It was somebody that I had done a KP role for, a key principal, where I signed on the loan, but I was otherwise passive. And that got me a little deeper into the fold.
Right.
I then partnered up with that person to participate as a sponsor on their next deal. And I helped with the capital raise, but I put helped in quotes because really I only raised, I don't know, maybe from 1 or 2 other investors at the minimum level for that syndication. But he put me on the list of sponsors, and I got to put that on my resume and tell everybody, hey, now I'm a sponsor. So the first real deal that I did, that was 42 doors in Austin. And that one unfolded in a really fun way. So a couple of young men reached out to me on LinkedIn, young men who lived in the Austin area and were just trying to connect with other folks in the space. And they saw my LinkedIn resume, and I think they might have run across me at a meetup or something. And they said, hey, let's have coffee sometime. I said, sure, why not? This was about a year ago. We went and had coffee, chatted, got to know each other a little bit. Towards the end of the time we were together, they mentioned, hey, by the way, we just got this deal under contract and we need to come up with some earnest money for it by the end of the week. And the guy who was going to put up the earnest money kind of dropped out of the deal. So if you know anybody, connect us up. And I said, guess what, guys? You've got a deal and no money. I've got money and no deal. I think we can make something happen here. And so they shared their underwriting with me. I went and toured the property. We went through a period of due diligence on each other, got to know them a little better. And I decided I wanted to be part of that deal. And so I went ahead and ponied up the earnest money and some legal fees and a loan application fee for them. I was in a position to write those checks and they were not. And so that was sort of how we added value to each other. As they brought the deal, I brought the money. We closed on that property in April, and it's been going gangbusters. When we bought it, the rents were $950 a month. We underwrote at $1,100, and after we finished the first top end renovation, we rented that one for $1,250, and the next one was $1,275. So we're blowing the doors off our projections. And since then, I've done 2 more deals closed already, and 1 more in contract with those 2 young men.
Awesome! Wow, that's incredible. So, I think a lot of people would think, well, wait a minute, Joel, you just met these guys and, you partnered with them on this deal. And, how did you know that it would be a good partnership, or you were willing to partner with them on such like almost short notice, right? They needed this money, it sounded like within a week. And so go walk through that a little bit, because I'm sure that listeners thinking, oh, wait a minute, I'm not going to partner with somebody that quick or hand them all that money. And I've only known them for a few days.
Yeah, that's a fair point. And, honestly, sometimes I'm kind of a ready, fire, aim kind of guy. I'm biased towards action, and that's gotten me into trouble a few times, but it's helped me get into syndications and blaze this trail way faster than I would have otherwise. So, like I said, I did some due diligence on the young men. They were connected with one of the major real estate networks that, folks might have heard of. And they had actually each done a deal sort of the same way I had done a deal, in the sense that they participated with another sponsor and they did a tiny little bit of a capital raise and, got themselves named as co-sponsors. So I knew that they had done their homework as far as understanding the industry and how to do it, how to do deals. And really for me, it was partly about them and partly about the deal. I felt good about the deal. I felt like, hey, this is an opportunity to jump in. If it doesn't go well, it's not the end of the world. Maybe I'll lose a few $1,000, but as I've heard said, it's, you can call that a seminar. If you end up losing a little bit of money on something like that and you learn something, well, then it was just an expensive seminar. So I was willing to do it and take that risk.
Yeah. I just hats off to you. Congratulations on making that happen. And so, but it sounds like it built a great relationship with these guys as well. You all have done numerous projects now together. And that was if you'd have said no to that, then, you'd have missed out, I think, on numerous projects. But something else I want to highlight is that, I seemed obvious to you, or to me, it looks like it was obvious to you pretty quickly that, hey, they had something you needed, you had something they needed. And you all could go make this happen, right? What about, and just from what you and I talked about before we started recording, it's like you had to overcome thinking that you had to do it all yourself, right? Just speak to that a little bit, because that's so common, right? And in our business, man, there is no way that I can personally be an expert in every part of the syndication business, right? And do it well and to scale, the way we want to scale, and to treat our investors the way we want to treat them, and finding the right deals and brokers. And it's just like, it's not possible for me to be in all those places and do all those things and do them as well as I want. So you have to build a team. How did you get past that thought process though of, hey, I can't do this all on my own. I'm willing to find partners and move forward that way.
Yeah, absolutely. I mean, it's a cliche that real estate is a team sport, but it's a cliche because it's true. I had this just fundamental limiting belief when I was starting to invest that I had to do things on my own. So when I bought my first single family investment property, when I bought a duplex here, a triplex there, I was thinking, okay, I have to do this on my own. And so whatever I'm going to buy, the bank will come up with 75% of the purchase price. I got to do the other 25%. And so it sort of manifests itself as a belief that I had to come up with the financial means to buy everything that I wanted to buy. So when I learned about the syndication model, my focus was on the financial limitations. At the time, when I was first learning about it, I didn't understand how effective the syndication model could be in filling in other gaps in my skill list, in my resume, and my contacts list. That all came a little later. For me, it was initially just, hey, I can buy a $5 million asset and I only have to put in $50,000. That's phenomenal. That means I'm coming up with 1% of the purchase price instead of 25%. So this is a fantastic way to scale. And as I understood the syndication model better and better, I realized, okay, it's really a partnership at its most fundamental level. And it's a very specialized kind of partnership where people have roles. Some people run the deal and do the work. Other people write the checks and collect payments, but are otherwise passive. That's phenomenal, right? Everybody gets to focus on what they like to do and where they can add value. And together you can take down much bigger deals and scale up way faster than you could on your own. So that was just, for me, when I learned about the syndication model, it was really an eye-opening epiphany moment that unlocked just tremendous value and a whole new path for me.
What is Agent Ignite? Are you wondering how you can make more money and create a competitive advantage for yourself and your clients in this ever-competitive real estate industry? Agent Ignite is the key to furthering your knowledge, establishing your expertise, and positioning yourself as a go-to expert. They deliver new and relevant knowledge so you can expand your clientele, close more deals, and ultimately increase income. Each month features a new guest speaker who will deliver on what is most relevant for your business. As a member of DMAR's Market Trends Committee, an avid champion for building wealth through real estate, and a self-proclaimed data geek, Nicole will share market trends and commentary that will add value to you and your clients. Staying up to date on industry statistics, coupled with niche topics delivered by industry experts, will help you motivate your buyers and sellers and make you more money. Sign up for the next Agent Ignite session at theruthteam.com/events. Yeah, such a incorrect thought process of thinking, oh, I've got to give part of the deal away, right? To be in a partnership. And I just think it's so backwards because a little part of what is it like? If you can have 5% of a $100 million deal, that's amazing, right? Versus all of a duplex, right? I mean, what do you think is going to be better there? But I just think it's a lot more fun to have a team that you're working with. But I think it also minimizes risk because you all have different skill sets. You all have different eyes on everything you're looking at, and everybody has different questions. And it raises things that, hey, you may not and probably would not see if you were just doing it by yourself.
Oh, absolutely. And not only that, it's helped me to expand further and faster than I would have for another reason, which is as it's emerged, I found that my skill set and my value to teams tends to be on the front end. So I'm focused on helping to make the transaction happen. Once we close on the property, I help with the asset management. I'm not really driving the effort. I'm not in charge of that. And so because of that, I'm spending relatively little time on the properties that I already own that we've already closed. The rest of my team handles most of the day to day, and I can go off and focus on the next deal and the next deal and the next deal. And so that's helped me scale way faster than I would have. Let's say if I somehow had the means to do a syndication on my own, then I'd be doing the asset management. I'd be doing working with the property manager, figuring out the renovation plan, understanding which tenants we got to evict and how to fill vacancies and all that. And the property manager is sort of in charge of that, but the asset manager definitely has to be involved. And by handing off that responsibility and focusing on where I can add value, that's helped me do many more deals than I would have otherwise.
What would you do different if you could go back 5 years, maybe even 10 years, what you know now, but what would you different about getting into real estate or syndication or any tips for the person that's listening right now that may be in a similar spot?
Well, it's probably the same answer you're going to get from everybody, right? Start earlier. So start earlier and go bigger. I would have house hacked first, right out of college, bought anything and bring in roommates, whether it's a duplex or a single family and just rent out the rooms or whatever and just get started that way. Yeah,
me too. Me too. I love that. I wish somebody had pushed me in that direction in a big way. I may not have listened though, it's just anyway. But tell us, Joel, do you have any predictions just for the real estate market over the next 6 to 12 months? Anything you're expecting to happen or maybe you're planning for, anything like that?
So I try to stay out of the prediction business other than just to say at any given point in time, the future looks uncertain and it always will look uncertain. You always will be facing risks of things going worse than you expect. And so you just try to be reasonably conservative in your assumptions when you're underwriting deals and making decisions. A couple of the big risks I see right now are one, inflation is rearing its head. And with the supply chain issues, I can see that, that'll jolt prices even more, which could create more uncertainty, could increase interest rates, which could trickle down into, difficult price. On the other hand, in inflationary times, real assets tend to hold their value and, rents will probably rise too. So that'll have a counterbalancing effect. So I try not to get paralyzed with fear over that possibility. Another thing that I think is a potential risk in the areas that I invest in, I'm focused mostly in Texas. In fact, all of my active deals are in Texas. I'm passive in some other states, but sponsoring deals in Austin and Houston. We're just getting a tremendous influx of people from other states, especially California, New York, Illinois, places where it's more challenging to do business, places where it's tougher to create jobs. We've got a relatively low cost of living. And that influx of immigrants from other states is driving a lot of the growth in the Texas market. So that could change, right? Those other states could wise up and say, hey, let's not be so hostile to businesses and landlords and profit. And let's not tax our citizens quite so heavily. And, let's rethink how we're approaching things. Luckily, they don't show any sign of doing that. And so that's to Texas's benefit. And I'm super happy to be in Texas now. But that's, inflation and the a pause in the immigration into Texas. Those are the two big risks that I would see in the next 6 to 12 months.
Yeah, no, that's awesome. That's an interesting take on that. I don't think I've heard anyone talk about that potential risk of those states, maybe opening their eyes and seeing what's happening here, right? I'm not sure I expect that to actually happen, but it is something to keep in mind. But on that note, and tell me a little bit about maybe how you prepare for a downturn. You're looking at new deals or those things to happen. None of us have a crystal ball, of course. I love how you say I stay out of the prediction business, and I think it's wise. But how do you all look at just being prepared for something potentially like those things happening?
Well, two things. Like I said earlier, one thing is just try to be conservative in your underwriting. So when I'm looking at a deal, I like to see, for example, a prediction of, let's say, 2 to 3% rent growth at most, not 5 to 6% or higher. Even though Austin consistently over the last couple of decades has been 5 to 6%. If we can make a deal work with more conservative assumptions, and not just about rent, but other factors as well, then I can feel good about that deal. And maybe it'll outperform, like the one I described earlier. We predicted 1,100 in rents. We're getting 1,250. That's phenomenal. I love having a positive surprise. I like winning way more than well, let me put it this way. I hate losing more than I like winning. So I like to be conservative. The other thing I do to I don't know if you'd call it preparing for a downturn, but I just take a long-term perspective. Anytime I invest in one of these deals, whether it's active or passive, I'm still investing in more deals as a passive, as well as the deals that I'm sponsoring. Anytime I invest in one of those deals, I think, okay, that money is stuck in that investment for at least 3 years, probably much more than that. Let's call it 5 to 7. I'm not going to see a dime. Maybe I'll get some cash flow, in which case I'll be tickled pink. But if for some reason the cash flow is interrupted because they got to work heavily on the renovations or whatever, that's not my grocery money. It's money that I've got tucked away for the long term. Maybe even for a family legacy. So I'm not going to worry about it. I'll just I'll read their updates every now and then. I'll kind of keep an eye on them, make sure they're on track, but I'm not going to worry day to day about it. It's just that money is sunk and it'll come back to me in a few years.
You're every operator's dream LP right there. No, I think that's very wise as well. I was talking to one of our larger investors this morning and just about liquidity, right? It's like, I just always try to stress, say it's not liquid, right? It is not liquid. I hope you don't need it for grocery money. If you do not do not put it in one of these deals, in anybody's, right? So I appreciate the level of detail as well. Just elaborating on being conservative and what that looks like to you. I think you made some great points for any of us that are passives as well. I am as well in other people's deals and obviously in our own. But tell me a little bit about maybe one thing about how you're improving your business now or scaling, as you're becoming an operator and doing more active deals as well.
Yeah. So I guess a couple of things. One is I've recently signed on to a new investor portal called Cash Flow Portal. And that one's helping me keep track of my investors and helping me communicate with them. I'm also using a CRM system, a customer relation manager, to keep track of my contacts, which is really essential, especially for syndicators, because Whitney, as I'm sure you know well, the audience may not understand it as well, as with a 506B syndication, you have to have a personal, substantive relationship with every investor before they can be in a deal. And so I use that CRM to not only keep track of people, but also to document. So I'll take notes when I have a conversation with somebody that I believe has helped contribute to that substantive relationship. I'll write up some notes. I'll make it dated the right date, so I know exactly when I had that conversation. And that way I keep all my ducks in a row in case the SEC ever comes calling saying, how do we know that you really have these relationships that our rules say you have to have? And so that's one way I try to maintain my business and protect it against, some kind of issue.
Yeah. Great advice. The best CRM is the one that you use, so actually use it, because no doubt in our business, it is so important that you are documenting those relationships and taking some notes about phone calls when you talk to people. And so you can show that trail of relationship building, right? You did know them before they launched a new project or opportunity. Quickly, what CRM are you using, Joel?
It's called HubSpot.
Okay. Awesome. We use HubSpot as well. It's a beast. It's a lot to learn. But it's very robust, and depending on what level you're in it. But I would say, at a higher level, it's pretty expensive, but can do a ton of things.
I'm 100% sure that I'm using less than 1% of what it can do.
We've not maximized it, but we're working on it. What's your best source for meeting new investors now?
Let's see. I run a meetup once a month in Austin, and that meetup has actually really caught fire. We've been running it for about a year now. And the first few meetings, we had maybe 6 to 8 people at each one. There was one meeting that we had 3. That was really kind of depressing. But we changed the venue. We changed up the format a little bit. We now do half an hour of networking and then half an hour of education, where my partners and I will present on some topic relevant to investors, like capital raising or how you make money as a syndicator. And then after we're done with the education, we go back to networking, and people just hang out for another hour and a half just talking. And the last few months, we've had 40 plus people. The one we just held last Monday, we had 78. So it was a packed house.
Wow.
So that was awesome. Great way to meet new investors, but also it's a fun way to deliver value to people, helping them connect and helping to educate people. There were it's a mix of beginners and experienced syndicators. And so with that mix, there's a lot of different perspectives on, how much people know, what they want to know, what topics are helpful to people. And so it's great to kind of bring everybody up to a similar level in terms of their understanding of these topics.
What's the frequency? Weekly, monthly?
Once a month, first Monday of the month.
I appreciate you mentioning that, and even you saying that, hey, the first year it was like limited, right? Like sometimes 3 people there, and that would be discouraging. But you didn't stop there, right? You didn't think, this just is not working. Even after a year, you changed it up. You said, changed the venue, changed the structure of the meeting, and now up to 70 some people. I mean, congratulations on making that happen. That's incredible. I just think anybody listening, there's opportunities like that. And in a place in Texas, I mean, there's tons of real estate meetups, right? I mean, there are a plethora of them, I believe anyway. I've been to some of them there, but man, Joel's still able to keep this going and have 70 some people at his meetup where he's in front of the room presenting himself as the expert, and he's become the expert, because of that, the work he's put in. And so it's congratulations on making that happen.
Yeah, that's a great point, actually, that by running that meetup, the perception in the room is I'm an expert on the topic. And I feel like I have become a bit of an expert now that I've done some syndications, but initially I really wasn't. But, the old fake it till you make it, I'm the guy up there in the front of the room and I'm presenting, and every now and then a question comes in and I'm like, well, I don't know the answer to that one. But by organizing the meetup and being the presenter, that's the perception people have of not just an expert, but a leader in the field.
That is right. It's so true. But also a point you just made too, is that you were in front of the room, you were organizing this maybe before you had done a syndication or before you felt like you were an expert anyway. You don't have to wait till you've done a bunch of deals to go start a podcast or to be, start your own meetup, right? It's just some great points so many limiting beliefs around those things what about some daily habits, Joel, that you are disciplined about that have helped you achieve this level of success?
What's funny is I tried to think about that because I know you asked your guests that, and I don't know that I have too many specific daily habits. I mean, I check my email all the time. I've got some things that I check on each property now and then. But one of the things I love about what I do now is it's so unstructured. I can approach it any way I want. And every day is just a new set of tasks and challenges and things. And now that I'm my own boss, I don't have a W-2. If I feel like taking a day off, I just block my calendar and, hey, nobody, it looks blocked on Calendly. Nobody's going to be able to make a meeting with me. That's it. I get that day off. And so, for me, it's just so much fun to be in the business because of that, because of the unstructured and independent nature of it. It matches well with my personality. And, I tell people I've got what I call my glide path to retirement, which is if this ever becomes less fun for me, if it feels like work at any point, I'll just stop doing the sponsored deals. I'll just go fully passive because I know lots of syndicators now. I get at least 5 or 6 deals a day in my inbox. It won't be any problem for me to just stop doing active deals and just be passive in everybody else's deal and live on the cash flow. So I'm having fun. I'm going to keep doing it. And as long as it stays that way, I'll continue. But eventually, maybe I'll get tired of it and I'll do something else.
Yeah, no, that's awesome. The freedom is just, an amazing part of it. Being an entrepreneur, no doubt about it, especially this business. Love that as well. Joel, how do you like to give back?
Oh, a variety of ways. I mean, at a fundamental level, as a syndicator, I'm improving tenants' lives by renovating their properties, by making them nicer. I'm improving my investors' lives by giving them a great return on their money and giving them an opportunity to diversify their portfolios. I also love to help connect people and educate through my meetups and other venues. Back when I was in California, I ran a nonprofit focused on education. We would bring in speakers on a monthly basis to talk about, current events and cultural topics. I haven't found a group like that in Texas yet to connect with, but I'd love to. But yeah, I do what I can to serve others in my capacity as a syndicator and a real estate investor.
Awesome. And even giving back through your meetup as well. Helping educate others and connect others. But Joel, grateful to get to know you better and have you as a guest on the show. Just your path in this business as one that others can take as well. But man, there are tons of limiting beliefs that you also help just kind of blow out of the water today. Whether it's doing it on your own or, starting big, like you said, you wish you had started much earlier. Yes. But finding those partners, like you have done, investing passively, even connecting with those operators so you can learn more about the business and sit in on those property management calls to now, sponsoring many projects and moving forward in a big way and having that freedom, like you're talking about, that most dream of, right? Because they're not willing to be a little uncomfortable and get past those limiting beliefs oftentimes. Yeah. Joel, so thank you again so much. Tell the listeners how they can get in touch with you and learn more about you.
Yeah, so I've got a website. My business is Lakeline Properties. So LakelineProperties.com, Lakeline Properties. On that website, I keep a list of books and podcasts that have helped educate me. And Whitney, your podcast is right there at the top of the podcast list.
Well, thank you so much.
So yeah, they can go to my website. They can email me, Joel@LakelineProperties.com. And I'd love to hear from other folks who maybe I can partner up with in some way, whether they're passive investors or have a deal that I can help out with, and love to talk about real estate.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.